$63 billion spent, zero profit returned. The biggest companies on Earth are hemorrhaging cash into machines that cannot yet pay for a single employee's salary. It started with a simple promise: AI will print money, eventually. So Microsoft, Google, Meta, and Amazon opened their wallets, not cautiously, compulsively. Think of it like a restaurant that spent $63 billion building the world's greatest kitchen, but hasn't opened the doors yet. Infrastructure first, revenue later. Trust us. Banker, we're building the future. Investor, when does the future pay rent? No one answered that question, not loudly anyway. The spending went into Nvidia chips, into data centers the size of small cities, into electricity contracts that locked in costs for a decade. But here's the part nobody tells you: not a single dollar of this $63 billion was guaranteed to come back. What could go wrong? Everything. Enter the AI arms race. Irrational, electric, unstoppable. Every quarter, the numbers got bigger. Microsoft, $14 billion in capex. Google, $17 billion. Meta, $10 billion. Amazon, $22 billion. One quarter. Meanwhile, the revenue trickled. Azure AI cloud revenue grew, but grew slower than the spending. The gap widened every month, like a wound that wouldn't close. One absurd detail: a single Nvidia H100 chip costs $40,000. These companies ordered them by the tens of thousands, stacked in warehouses, waiting for software to justify their existence. And the market cheered anyway. Nvidia stock tripled. Valuations soared. The party was extraordinary. But at 2 a.m., the music changes. Actually, it was already changing. Nobody turned around to notice. Then, a small Chinese lab released a model, cheaper, faster, built for almost nothing. January 2025. DeepSeek doesn't arrive, it detonates. Nvidia loses $600 billion in market cap in one day. Meta's Zuckerberg calls an emergency all hands. Microsoft quietly revises its data center expansion plans. The question nobody wanted suddenly became unavoidable. Did we need all of this? Meanwhile, somewhere in Sacramento, a pension fund that loaded up on AI infrastructure stocks checks its quarterly return. Down 18%. Not metaphorically down, mathematically, permanently down. The machines kept running. The electricity kept billing. The chips didn't refund themselves. $63 billion in. And the business model was still a whiteboard drawing. So who pays? The architects of this bet will survive. They have cash reserves that could absorb a decade of losses. Their stock options vest regardless. The pension funds pay. The retail investors who bought Nvidia at $900 pay. The cities that signed 20-year power agreements with data centers now sitting half-empty, they pay. Actually, and this is the uncomfortable part, the bet might still be right. The technology might work. The timeline was just wrong. And being right about the future, but wrong about when? That's the most expensive mistake in capitalism. In 2000, Cisco built the internet's backbone, then lost 86% of its value. Then the internet became everything. The infrastructure survived. The investors didn't. The $63 billion in servers is still running right now, tonight, burning electricity, waiting. The question isn't whether AI works, it's whether you'll still be solvent when it does.